So I've been investing my money for about 4 years now, and I honestly feel like now, I'm finally at a place where I feel completely one with what I'm doing, where I'm at, so the actual numbers, and where I'm headed, so my strategy. So right off the bat, I'm not gonna keep you guys waiting. My portfolio value, so this is the combined amount of all of my individual investment accounts, is currently sitting at somewhere around $107,000. Let's just take a moment to take in the fact that we finally crossed the $100,000 mark in investments. Now, the reason that I'm saying we is because I know that a lot of you watching have actually been along on this journey with me. So going back to all the way when I had student loan debt and I definitely felt lost at times, to the point at which me and Steph really started to make strides in our long-term money goals, all the way to where we're at now. Now, in this video, we're gonna break down what my portfolio looks like, how the journey has been so far, especially over the last year or so. Side note, there's been some really big changes, and then we're gonna dive deep into the details of where we're at as of right now. Okay, so the last time we caught up like this, I was actually investing my money with a company called Questrade. Now, in that video, I did tease the fact that I was thinking about moving my money somewhere else for a number of reasons, but that didn't actually happen until later in the year, last year. Now, before we even get into all of that, I do want to give you a bit of a background on Questrade and why I initially chose it. Now, I know that there's a lot of you watching this video who still use it to invest to this day, which, like I've said before, is perfectly fine. But in case you haven't been around for a while, there is a reason behind why I decided to leave. So if we go back to when me and Steph were first starting our investing journey, so for me, that was late 2021/early 2022, our options were between Questrade and Wealthsimple. Now, I decided to go with Questrade because they really catered to the DIY investor at the time. They offered a lot of features and account options, and both Steph and I wanted to show you the journey from two different perspectives, aka two different platforms. Anyways, up until last year, I was actually really happy with their platform. And that's not to say that I eventually became unhappy, but let me explain. Their platform was easy to use, and they had launched a brand new app that was also super user-friendly. But given the fact that I had made the conscious choice to change my investment strategy to just keeping it simple, I just didn't really need all the extra accounts or features. And I could also squeeze out a bit more savings by moving my money to a platform that was completely commission-free. Also, I realized after seeing Steph use Wealthsimple's platform over the years, just how user-friendly it was and how it really catered to the simple everyday investor. Obviously, there's trade-offs with both platforms. Like, for example, Wealthsimple might not be the best option if you're someone who invest in US listed stocks and funds, but it was finally time for me to move on. Now, my actual investment journey so far has been an interesting one. When I first started investing, so again, going back to early 2022, I had my heart set on building the most optimal investment portfolio. I had a brand new empty TFSA with anywhere from $1,000 to $1,500 a month available to purchase investments. Everything felt exciting right up until I started doing more research on where I should actually be investing my money. To make a long story short, I ran into something called information overload. And if you're someone who has a type A personality like me, this just isn't ideal because, as you can imagine, I was looking for the perfect portfolio. So the perfect combination of stocks and ETFs that I could purchase and hold long term. Well, the reality is that this just doesn't exist. But technically, there is still a right and a wrong way to invest. And whatever I was doing in the beginning just wasn't working for me. Ultimately, it's not just about the specific investments that you choose. And yes, that's definitely still an important aspect, and you'll see why in a few minutes. But it's also about being able to commit to a strategy that you can actually implement over the long term. Think about it this way. If your investment portfolio is super complicated and you're buying all sorts of ETFs and stocks, which is what I was doing at the time, first of all, what's your goal in doing that? And second of all, is this something that you can actually see yourself being able to do and manage over the next few decades? If the answer is no, then you probably need to reevaluate. Now, the first big move or change that I made was when I decided to no longer invest in a variety of different stocks and ETFs, and instead put all of my money into one single ETF, called XQT. Now, XQT is a globally diversified all-in-one ETF. And what that means is that it's an ETF that's made up of multiple other ETFs that's all packaged together for you into one overarching ETF. Now, all-in-one ETFs are great because they can offer you two main things. The first one being simplicity, in that all you have to do is buy one ETF instead of having to purchase and manage a whole bunch of other ETFs, as well as diversification. In this case, XQT is made up of 4 other ETFs to be specific. It's also a 100% equity ETF, meaning that there's no bonds or fixed income. And the underlying ETFs that it holds represent the US market, the Canadian market, the international market, and the emerging markets, which is, once again, this is where we get our diversification. Now, when I initially decided to make the switch to XQT, I sold off everything that I had invested at the time, and then all of a sudden, I had $20,000 that was available to reinvest. You know, it's funny because this was obviously a lot of money for me in that moment. This was pretty much my entire net worth, and for a lot of people, when you're making that decision of dropping this really large amount of money into one single ETF, most people might second guess or even think twice about it, like what Steph's talked about before. But for me, once I made my mind up and I figured out that this is what I wanted to do, basically I was good to go. If we look at the overall growth of my TFSA, really I went from $0 to $20,000 before I made my first big switch. And then after that, it was about making consistent contributions. So starting at about $1,000 a month, which ultimately led me to 2024, where I managed to invest $2,000 a month over the course of that entire year. Now, because I had racked up so much unused contribution room in my TFSA, it really did take me a long time to max out that account. But I did manage to do that prior to making my next biggest move, which was switching investment platforms. Now, before I even talk about the big switch, I actually only had about $40,000 in my TFSA towards the beginning of 2024. So what this meant was that in order for me to max out my TFSA at the end of the year or towards the end of the year, it would actually either take some sort of miracle or some big like money payout. Well, what ended up happening was that I had actually been keeping some money on the sidelines, so about $20,000 in my high interest savings account, in the event that a real estate opportunity came up. After thinking about it and reevaluating, we decided that real estate was likely not gonna be our focus for that year. So what I did instead was I decided to just lump sum that $20,000 into my TFSA, which brought up my TFSA contribution room or TFSA contribution amount to about $60,000. Now, I guess this was also a pretty big decision too, now that I'm thinking about it, because you guys know that we've been talking about real estate for a pretty long time now. So making that decision to put it on pause, at least in the short term, wasn't something that I took lightly. Anyways, I ended up switching investment platforms in November of 2024. And at that point, I had just maxed out my TFSA, so right before I made the switch. And what this also meant was that I now had $75,000 in contributions directly in my TFSA, all in XQT. To me, this was just unbelievable. Like the fact that I had not only just maxed out my TFSA, but the fact that I was also really comfortable with how I was investing my money, that feeling was just surreal. Okay, so if we take a look at my TFSA portfolio really quickly, I'm just gonna scroll down here. If we jump into my TFSA, what you'll notice if I take a look at the week, the month, even the 3 months, there's been quite the fluctuations over that time period. But what you'll notice if I look at the all, you'll notice that there's this cliff, right? So basically all this past data just doesn't exist because I made the switch over from Questrade to Wealthsimple. So any previous information just, it's just not available. So all the information that we have is from when I first dropped my portfolio into Wealthsimple. Now, if we actually go down and we look at my holdings, once again, I only have XQT. If we scroll down and we actually go breakdown by account, if we look at my TFSA specifically, what you'll notice is that my return as of right now is somewhere around 12%, 13%. It's kind of been fluctuating a lot recently, but that's pretty much where it's been at. But yeah, if we take a look at also my actual contribution, so how much I've contributed, that's $77,000 approximately, right? $77,607. The actual value though, so this is where that return comes in, is $87,000. So to me, that's pretty cool considering that I made this switch, I made this decision to keep things simple, and over time I'm slowly seeing that growth. So now once my TFSA was fully maxed out, the next account that I opened was an FHSA, or the first home savings account. Now this account is obviously for purchasing your first home, something that we haven't done yet or plan to do in the near future. But to me, this account was a no-brainer considering the fact that it combines the benefits of the TFSA and the RRSP. Basically, the way that I see it is that at some point in the future, Steph and I are gonna purchase a primary residence. We don't know when, but the thought is there. So why not get some of our money working for us and growing in the stock market in the meantime? The worst case is that we choose not to purchase a home within 15 years of opening the account and instead be forced to roll that money into an RRSP, an account that we'll talk about in a few minutes here. Now for me, maxing out the FHSA was actually pretty easy, given that the contribution room rolls out in $8,000 increments each year. So for 2024, $8,000 was the max that I could contribute to this account. So now, because I had maxed out my TFSA towards the end of the year, this meant that I only had $4,000 available or left to contribute to this account. And this is where I decided to look into some money that I had forgotten about. Basically, back in 2021, I had bought and sold off some virtual basketball cards, of which I netted $4,600. So basically this money had been there all these years, slowly growing, but now it was time to really put that money into the market and actually get it working for me. And that's what I did. I invested another $4,000, bringing me up to my max contribution limit of $8,000 for the year. Now, given the fact that me and Steph don't know exactly when we're gonna buy our primary residence, and also given the fact that we do at least know that it won't be any time in the short term, that meant that I made the decision to actually invest all $8,000 into XEQT. Personally, I'm okay with this level of risk because my timeline extends beyond the typical buying a house timeline, which is usually a shorter time frame. So for me, putting my money into an ETF that's 100% equities doesn't really bother me at all. All right, so if we pull up my FHSA and we actually go into the account, what you'll notice within this graph here, I can honestly just toggle these different timelines. If we actually look at the 3 months, you'll notice that over the last couple months, obviously things have been a little bit turbulent, but for the most part, because there isn't that much money in here, you're not really seeing these like really huge swings. But I will say that anytime you see the steps, that's me adding money into the account. So if we actually go in, first of all, you'll notice that, like I said before, XEQT is my only holding within this account. I don't buy anything else. Now, if we actually go to the breakdown for my FHSA specifically, you'll notice that I've invested a total of $8,000. There is $8,065 in there because I was paid a dividend that was reinvested. But you'll notice that I'm not really up by that much. This is a pretty recently opened account. I'm up by, 1.41%. So I've invested $8,065 and my value of the account is sitting at $8,179. So yeah, I guess I'll keep you guys posted on this account, especially now that I'm gonna be adding more money now that my room has reset. But this is basically it. Now, when it comes to my RRSP, this one's actually a really interesting one because I hadn't planned on adding money to this account. It kind of just happened. So to give you the backstory, when I left my corporate job back in 2021, I had a registered pension plan with my employer. Basically, over the course of my time there as an employee, my employer had been taking small amounts of money from my paycheck, matching those amounts, and then investing them into a retirement account on my behalf. Now, similar to a lot of people, once I quit my job, I had the option of either keeping my money with Manulife, which was the company that managed the registered pension plan investments, or I could take that money and invest it elsewhere myself. Well, over the last 3 years, I've basically been unable to transfer my money from this account. What would happen is I would call them, they would give me the runaround and basically tell me that I was missing forms, forget to process my documents, basically everything that you can think of for years, honestly to the point where I had just given up on the process from a time perspective and I didn't want to deal with it anymore. Now, all of that was all until this past November where I basically decided that I was no longer going to let them hold my money hostage hostage. And I was basically gonna commit to calling them every single day if I had to, in order to confirm that my money was on its way. Well, after 2 long months of back and forth, my money finally arrived and is now sitting in my RRSP, being invested in the exact way that I want it to be. And by the way, we're gonna do a completely separate video on this where we discuss everything that happened, so make sure you stay tuned. So now, to give you a bit of the details, I was able to transfer $8,663 over from Manulife to Wealthsimple. And now, similar to Steph, I also made the decision to purchase VXC instead of XEQT within my RRSP. And basically the way that I see it is this. So right off the bat, I do wanna first point out that you do not need to purchase any other ETF if you're already purchasing an all-in-one ETF like XEQT within your accounts. You can literally hold your all-in-one ETFs in any and all of your accounts because that's what they are. They're all-in-one ETFs. They're literally meant to be a one fund solution that you can use across all these accounts. For us, this is more of a personal choice that looks at home country bias, in that XEQT holds 25% within the Canadian market, which is a lot compared to the global weighting, or how much Canada actually accounts for globally. And in the future, I may choose to transition over my RRSP over to an ETF like VT anyways, once it actually makes sense to do so. But once again, that's like a discussion for another day. All right, so now if we pull up my RRSP, let's actually jump into the account. You'll notice first off, this is obviously the newest account. This is the account that I've opened the most recently. And it's kind of funny because it does have more money than my FHSA, but that's more of a factor of I had maxed that one out and I couldn't actually add any more money. But let's actually dive a little bit deeper. So if we go into my actual holdings, you'll notice that, like I said before, VXC is the only holding that I have within this account. Now, in this account, my total return is 3.17% as of right now. I've added in $10,752, and basically this factors in the amount that I moved over from Manulife, as well as an additional contribution, so about $2,000 or so. Now, what you'll notice is that I am up, so the account is sitting at $11,093, which is, pretty cool. But once again, this is a new account, right? So what we're gonna see in the future is this account is definitely gonna fluctuate, and yeah, we'll keep you guys kind of looped in. But for the most part, I can't really say that there's too much going on here. It's a brand new account. I will say that I am looking forward to being in a place where I can actually, once I've maxed out my TFSA and my FHSA, be in a position where I'm able to max out my RRSP. So yeah, so that's it for my investment portfolio update and results. Make sure you let us know how your investment strategy is going down in the comments below. And yeah, make sure you check out this video next. Let's go.